All right, guys. Today I'm doing things differently. I just want to show you how I do my online classes. So I will be meeting with my student in few minutes. So you're all going to see how I do the online classes. Oh, there's someone here waiting for me. Meet. Because I'm recording. Ori, hello.
Hello.
How are you?
How are you?
I'm good
I'm
myself.
good.
I'm doing fine. How was your day?
That was good.
Fine, fine. Yeah, we will be waiting for Lindeni now, ne?
Okay.
Yeah. So we're just gonna wait for her in the
Oh,
meantime.
okay.
So did you do the homework?
I couldn't.
Eh?
I couldn't
Why?
because I only got the message yesterday and then I had an accounting test today.
Okay. The test was about what?
Yeah, that's what we're doing.
What we're doing. How was it? How did you write it?
It was good. It was good.
It was good.
Yeah, but not the theory part, but the latest was good.
Okay.
Yeah.
Okay, let's complete these ones and then we'll see. But next week we're going to start something else, ne? Next week I want us
Oh, okay.
to do we must do the note to the cash flow statement. We have to break
Oh,
down
okay.
the cash flow. So I'm just waiting for
Cash flow is it? Or is it a new topic or still the same thing?
right. I prepared two documents. I didn't okay. I want to use this one. You can still see this one, ne?
Yeah.
Okay. We are only going to do from 4.1 up until 4.4. Okay.
Okay.
We're just gonna go through the information that is given. Uh, you are provided with the information relating to the banner stores Ltd for the year ending for the year ending 30th of June. The company has a registered authorized shares of, remember this is what is important, okay? Our
Okay.
authorized share now is 1 million. It's 1 million. Let me check down something. It's 1 million. 40% of authorized shares had not yet been issued on the 1st of July, the beginning of the current financial year. From this statement, let me ask you, and we are going to do some calculations here together. Ne? Can you start by look at this and then try to tell me how many shares do you think are issued so far? Because they say 40% of the authorized shares had not yet been issued, meaning that 60% is being issued already.
Oh, okay.
Uh,
So
yeah,
600,000
600,000. So it's going to be 1
have
million,
been,
1 million multiplied by 60%.
yeah.
All right. So that is correct, okay? So 60,000, 600,000 shares are not yet issued. Okay, let me. I think Linden is here. Okay, let me accept her. Okay, I think she is in now.
Mm.
Linden?
Hello.
Yeah, she's in. All right. How are you?
I'm okay, and yourself?
I'm doing fine, thanks. Did you write the homework?
Okay. Yes, I tried, but somewhere you're not given all the information.
Oh, you just say, I think I was not given the whole information. I'll show you that everything that you have required is given.
There is no text.
There is no text.
Yeah.
Okay, we'll see it when we get to it, okay? But anyway, what were you doing with the text? Oh, you were doing the retained income, ne?
Yes.
Okay. I know we'll see it when we get there. It's fine. Our information starts from A to G, ne?
She is.
But the text I see it there. Or do you
It
see the
says this
text?
was.
Yeah, I do see that.
Here,
It's before the before tax. This is the net profit before tax.
these two information, they are going to help us. I will show you, ne?
Okay.
Yeah, it's fine. Everything that you need is within G and F. Right. We are not that far, Linden. We're just talking about this information on top here. The one that says you are provided with the information relating to Banner Stores Ltd for the year ended 30th of June 2003. The company has registered authorized share capital of 1 million shares. 40% of the authorized shares had not yet been issued on the 1st of July 2002, the beginning of the current financial year. Okay? So, let me ask you, how many shares do you think are not issued at the beginning of the year?
It's 40,000 shares.
40,000.
Yes. No, sorry.
How much? 1 million?
400,000.
400,000, okay? That means 600,000 has been issued.
Yes.
Okay? So now, we are going to start with number 1. We are going to complete the table. That is for accounting equation, okay? Just to check if you understand the double entry that we have been doing. You remember when we were doing the ledger, we were doing the double entry, ne?
Yes.
Yeah, so we are going to check them. You had the answer book for that, I guess. So we are only going to focus on information number C and information number B as it is stated here. Information B and information C. So let's check what has happened. Okay, I think I have the little bit of it here. Let's go to information B first. On the 31st of December, all unissued shares were issued at 500 cents per share. These new shares do not qualify for the 25-cent interim dividends paid on the 31st of December. See information D below, okay? So how can we record this? The only thing that we're going to record here, we're going to record the issue of shares.
Mm-hmm.
So how many shares are issued on the 31st of December?
400,000.
400,000 shares, okay? Okay, we'll just do the calculations here. How do you get 400 is 1 million
Multiply by 40%.
multiply by 40%. And we got 400,000. You're also following Orine?
Yeah.
All right. So which account will be debited?
Bank.
Let me.
Debited.
Yeah,
Bank.
it's going to be bank. I don't know if my marker now, I think it's too big. Okay. It's going to be bank. Remember, we are issuing the shares. Therefore, we must receive the money for issuing those shares. Okay?
Oh,
So which account will be credited? Ori?
I don't know.
Remember the
Ordinary share capital.
remember the ledgers that we were doing. I even showed you how it's going to appear in the bank account. You remember on Tuesday.
Yeah. Yeah.
So if the bank is affected, automatically there's an account that is affected, and actually that account is affected first. Lindeni,
Oh, the ordinary.
the ordinary
Is it
share.
ordinary share capital?
Yeah, ordinary share capital. Okay. Now let's talk about the effect on accounting equation now. I want to know that amount. Kana we said it was 400, okay? 400 shares. Not the 400 is not the amount, okay? These are just the number of shares.
Yes.
So this number of shares, they were issued at how much? At 500 cents. So how much is the value of those shares?
2 million.
The value of those shares is 2 million. Because now we're going to say 500 cents divided by 100, which is equals to 5 rand. It means that these shares are issued at 5 rand each.
Okay.
Therefore, now we're going to say 400,000 multiplied by 5 rand. So which gives us 2 million. So that is the value of the remaining shares that you have issued, okay?
Yes.
Meaning that, okay, before I write there, what is going to happen to our asset? Is the asset affected?
Yes.
It is affected in which account? Which account here is the asset between the bank and the ordinary? Which one is the asset? The bank is the
Bank.
asset, okay? How is it affected? Negative or positive?
Positive.
Positive. 2 million. I don't know if it's gonna fit. Okay, 1, 2, 3. Then the owner's equity and liabilities, which one is affected?
Owner's equity.
Owner's equity.
Positive or negative?
Is it because ordinary share capital is a owner's equity account?
Yes. That means the owner's
Okay.
equity is affected. All of this must.
Tom.
Yes. Remember this information
No,
I was telling you when we were doing those ledgers? You remember? But we never did the accounting question. But I was explaining the principle of double entry. Remember here, actually, the principle that we follow here on the accounting equation is the double entry principle, okay? Because if one account is affected, automatically the other account has to be affected.
Okay.
All right. Now let's look at another information. Information number C. On the 31st of March, 2003, the directors decided to repurchase 120,000 shares at 620 cents per share from a disgruntled shareholder. This shareholder had originally purchased his shares on the JSE at various times and at a different price over the past years. Okay? Right. Now, you remember the repurchase is being recorded in different accounts. You remember that?
Mm-hmm.
Now, now, Ori, this one is for you. You tell me. Let's go to the repurchase. The first account where the repurchase are recorded in is what?
Repurchase.
Yes. They're recorded in which account?
Is it shareholders for dividends?
No. The shareholders, just listen to yourself. You are saying the dividends, meaning that when we talk about the dividends, we are talking about what we pay our shareholders.
Yes.
Yeah. So remember, I told you about 3 accounts which are affected by the repurchase of shares.
Oh, retained income.
Is the retained income the first one, and the second one?
Is it the appropriation account?
No, we don't have the repurchase in the appropriation account. Linden,
Income.
what income? You have talked
Tax.
about the
Spouse income.
the retained income. Linden, where is she now? Is she still in? How? What happened? She left and joined again. Linden,
Hello.
what happened?
My network is bad.
Oh, it's key. So because it was just load shedding. Eh?
Yeah.
Okay. So we are still here with the issue of the repurchase of shares, okay?
Okay.
We talked about the 3 accounts which the repurchase are recorded in. So what is the first one that Ori have mentioned here is the retained income. So what is the second one?
Dividends on ordinary share.
The retained remember we talked about the repurchase of shares.
Mm-hmm.
Are they recorded under the dividends for shareholders?
Yes. Oh yeah, so it's dividends.
The repurchase.
The repurchase.
Remember I said the repurchase, we break it down in 3 accounts. One is the statement, 2 of them are the notes. Okay?
Oh, it's ordinary share capital and cash flow.
Ordinary share capital. Like,
Yeah.
so here we are not going to talk about in the accounting equation, we are not going to show the amount that goes to the cash flow, okay?
Okay.
We are only interested in the amounts that goes into the account where we're going to see the double entries, all right? Right. We are repurchasing how many shares? It was 120 shares, right?
Mm-hmm.
So, okay, let me go back to that statement. If you look at the statement, they say this person have bought these shares. They say the shareholder had originally purchased his shares on JSE at various times and at different prices over the past years. That means we have issued shares how many times? 2 times.
Yeah.
We have issued the shares 2 times, okay?
Yeah.
At the beginning, during the year. During the year, we have issued 400,000, and at the beginning, we had issued 600,000 shares. Agree?
Yes.
Now, let's check. You see that we are repurchasing after even the second shares were issued, all right? So what are we going to do? We are now going to calculate our average share price. Remember how the ordinary share is affected, okay? The ordinary share, it is affected with the average share price. Okay? And then the retained income is affected with the loss or the profit that we have made. Now, let's start. Okay, let's look at the value at the beginning of the year. The value of those shares at the beginning of the year, it was 1,800,000. For how many shares?
For how many shares?
Yes. Linden?
I don't know.
You don't know? Okay. I'm taking you back, ne? Look at this statement. Linden has a problem of network, I think. We are still here. We want to know we want to calculate the average share price, okay?
Okay.
Now I'm asking, what was the number of shares at the beginning of the year for the value of 1,800,000?
It was 600,000 shares.
600,000 shares. Ori? We go back to that statement, okay?
Okay.
You are provided with the information relating to Banner Stores Ltd for the year ended 30th of June 2003. The company has a registered authorized share capital of 1 million shares. 40% of the authorized share had not yet been issued. So how many percent have we issued of the 1 million?
We have issued 60%.
We have issued 60%. Therefore, how much is the 60% of 1 million?
600,000.
That means when we start our year, okay, we had 600,000 shares that were issued with the value of 1,800,000. Are you following?
Okay.
Sharp. Right. We are going to calculate the average share price. You know how we calculate the average share price, right?
Yes.
Average share price is equals to value of shares. Value of shares
Issued.
Yeah, value of shares issued divide by number of shares issued. Okay. Then let's go and check. At the beginning, how much was the value of shares?
The value of
1,800,000.
Yes.
1,800,000. Then what was the value of the shares that you have issued during the year?
2 million.
How much?
2 million.
2 million.
Yes.
Divide by how many shares did we get the value for 1,800,000?
600.
600,000 plus how many number of shares for 2 million?
400,000.
400,000. So all in all, we have issued 1 million, okay?
Yeah.
So this is going to be 2 million divided by
2 million, no. 3 million
I'm
800.
3,800,000.
Yes.
Yeah.
Okay.
Divide by 1 million.
Yes.
So that is equals to
R3.80.
R3.80.
Yes.
Okay. Now, what are we going to record in the ordinary share capital?
The balance of
Remember,
the
we are
ordinary share.
on the accounting equation, right?
Oh, okay.
So what we are going to do is that, okay, you know what? Let's rob this, and then I want to show you how to quickly get this thing correct, okay? We do the ordinary share. The ordinary share capital, okay? I want to show you how to bypass the accounting equation, okay?
Okay.
Right. How much? Remember, this is the owner's equity. Look, I'm writing debit here. This is the owner's equity, I get.
Yeah.
So this is minus, this is plus. Agree?
Yes.
So our balance was here. Balance brought down was here, right?
Yeah.
1,800,000. Okay.
Yes.
Now we have issued. You remember we have issued the shares, okay?
Yes.
And then the value was how much?
The value was 2 million.
The value was 2 million. Okay. Now we are buying back the shares. Which account is affected on the debit side that will make this account, these values to go down?
Sorry?
Remember, we have issued the shares. Now we are buying back the shares.
Yes.
So which account are we going to credit?
We're going to credit ordinary share capital. No.
In the ordinary share capital.
Bank.
Ori?
Bank.
We are going to debit the bank, because that money is gonna come to the is gonna come from the bank.
Wait.
Yes.
You pay them.
Yes. There is no way that we can repurchase them and not pay them, okay?
PG, right?
Yeah. So it's going to be, how many shares are we buying back?
120,000.
120,000, okay? So in the ordinary share, remember, we are recording at an average share price. How much is our average share price now?
What was it? 3 point something.
Linden?
3.80.
Yeah.
3.80. Okay. So how much is the value?
456,000.
Yeah.
456,000. Okay. Right.
Yes.
Let's do the double entry. We can do the double entry because we can see the bank is affected here. This one is already recorded in the accounting equation, so there is no need to do the double entry, okay?
Yeah.
Okay.
So we are going to do the bank the bank, and then what are we going to do with this amount?
Which one?
The 456,000. Remember, the bank appeared here. That means we must open up the account for bank.
Is it total payment?
No. This is just the amount that the average share price, that the value of the average shares that we are buying back. So since the bank is affected here, we have to do the double entry for this account. Okay.
Yeah.
Here we have opened up the bank account. So I want to know, how are we going to treat this amount in the bank account?
Oh, okay.
Where
Should
are
that be credit side?
It's going on the credit side?
Hello?
Yes, you are back. Linden, are you back? Okay, let me